Well, we have Abhishek Goenka. He's the founder of India Forex and Asset Management, who joins us right now on the show. Abhishek, good afternoon. How are you looking at the rupee trade now at the moment with respect to the dollar? What are the fundamentals that are potentially going to lead to the several changes with respect to demand and supply at the moment?
Hi. There are 3 or 4 major factors which are playing the dollar rupee right now. One is, of course, the big bang announcements by Donald Trump, where he talked about imposing tariffs. And on the weekend, he talked about imposing tariffs on the BRIC countries if they form a common currency. Now, that's something which is definitely impacting the rupee. The second important factor is the Chinese yuan. Yuan has a direct correlation with rupee. Normally, RBI adjusts rupee with yuan depreciation. We have normally seen this moving in the ratio of 1:3, 1:4. And the yuan has moved 3% weak in the recent past. It's at 7.28 today against the US dollar. So RBI is letting rupee depreciate. Third factor is, of course, we are seeing a lot of FII outflows, close to 1.6 lakh crores we have seen in the last 2 months. Interesting to see that it's the first time ever that RBI have built a short dollar positions of $60 billion in the NDF markets to protect the rupee slide. Last time this number was close to $20 billion. So that's another factor that RBI is trying its best because it never wanted a very, very volatile currency. They have intervened heavily. So from the current position, they have used $50 billion. So we are close to $650 billion reserves, plus $60 billion of short positions. Adding to the woes is not very great GDP numbers. And also, I think we are seeing some slowdown in the economy. Because of all these factors, we are seeing rupee weakening. Till the time we don't see the dollar end, and some steps by the Trump government and some relaxation on the tariffs front, we would see some pressure happening in rupee. But looking at the overall nature of what our government and RBI wants, I don't see a panic in rupee happening like this. So broad range of 84 to 85, 85.20 for the next 3 to 4 months. Any dips in the rupee, close to 85, 84.20 or 30 would be bought because RBI has used its reserves and importers will come in the market to buy. So 20-30 at the lower side, 85, 85.20 on the higher side. That's a broad range that we're looking for.
Okay, well, Abhishek, we leave it at that. Thank you so much for joining us and taking us through your view. It's a very clear one when it comes to the dollar against the rupee.